Welcome, curious minds, to another deep dive. Today we're plunging into a topic that's, well, it's as vital as it is volatile. The rapidly evolving landscape of cryptocurrency scams. You've shared some excellent sources with us, from comprehensive articles detailing the latest tricks to a pretty critical video warning. And our mission is to distill these into the most crucial insights for you. Okay, let's unpack this.
Indeed. And, the world of digital assets, it offers incredible opportunities, but it also, unfortunately, attracts those looking to exploit, well, trust and enthusiasm.
Yeah.
Our goal today is really to equip you with the knowledge to recognize these threats, understand how they work, and most importantly, how to protect yourself.
Right.
We'll explore how these scams have adapted, what the most prevalent schemes are right now, and, the practical steps you can actually take.
It really feels like scammers are constantly innovating almost in real time with every new technological advancement. It's not just the old tricks anymore, is it?
Oh, no, not at all.
We've seen a clear progression from earlier schemes to what's happening today.
You're absolutely right. What's fascinating here is just how quickly bad actors have adapted their tactics. I mean, if we look at a brief history of crypto scams, say, between 2017 and 2024, there's a really clear pattern.
Okay.
As new regulations pop up and technology evolves, so do the scams. For instance, we're now seeing the rise of AI-generated fake tokens and, get this, deepfake influencers.
Wow.
This isn't just about making a convincing image, it's about making it incredibly hard to figure out what's real and what's, manufactured.
So it's not just individuals anymore. It sounds almost like an industrialization of deception. I've heard whispers of things like wallet drainers as a service.
Precisely. Yeah, this is an amateur hour. We're seeing sophisticated tools like those wallet drainers as a service being sold, and AI-powered deepfake live streams designed specifically to lure victims.
Huh.
What's even more concerning, I think, is the professionalization. We now have subscription-based phishing-as-a-service kits available on the dark web. Yeah, this level of organization clearly indicates that, sophisticated crime syndicates are deeply involved, constantly refining their methods. It creates a very challenging landscape for users to navigate.
Okay, with that pretty daunting context in mind, let's dive into the specific types of scams you absolutely need to be aware of. It sounds like they often blend these old manipulative tactics with the new tech, making them incredibly potent.
Exactly. And understanding the mechanics of these scams, that's really your first line of defense. Just knowing what you're looking for can save you from a lot of heartache.
Okay, so where do we start?
Well, let's start with impersonation and copycat scams. Imagine you've just heard about an exciting new project, maybe a token launch or a new DeFi platform.
Right, the hype is real.
Exactly. Scammers capitalize on that excitement by creating fake versions of legitimate projects, websites, or even tokens. They make them look almost identical.
So like a knockoff brand, but with much, much higher stakes.
Precisely that. A common tactic is creating a token with the exact same name or ticker as a legitimate project. But here's the catch.
There's always a catch.
Right. These can be honeypots, where you can buy the token but then find you actually can't sell it. Or they might have toxic taxes, like a 100% sell fee that just takes all your funds the moment you try to get out.
Ouch.
Yeah. And while leading dexes like Uniswap are, trying to flag these with warnings, it's not foolproof, especially if you're rushing because of FOMO, that fear of missing out.
And then there's the more insidious version of this, right? The address poisoning scam. That one sounds terrifyingly clever.
Oh, it truly is. Address poisoning is a really cunning twist. Attackers send tiny transfers, often for zero value, from an address that visually mimics yours.
Mimics mine, how?
Well, typically it has the same starting and ending character, so you glance at it and it looks familiar.
Oh, okay.
This transaction then lands in your wallet's history. The danger comes later when you need to send funds. You go to copy an address from your past activity, maybe one you used before.
And you accidentally grab the scammer's address because it looks right.
Exactly. Because it looks so similar to one of your own, or a trusted one, you might accidentally copy and use their address. The FBI has explicitly flagged the scam, which really underscores how easily it can fool even people trying to be careful.
So you think you're sending funds to yourself or a known contact, but boom, straight to a scammer because of that tiny malicious entry in your history.
Well,
the critical thing here seems to be that these scams prey on our assumptions and the fast pace, making us rush and overlook details.
That's it, exactly. Okay, moving on, our next category is investment illusion scams. These are the classic too good to be true traps.
The ones promising you the moon, guaranteed returns, zero risk.
Yeah, right.
Precisely. These schemes promise high, often totally unrealistic returns. A prime example is the classic Ponzi and pyramid schemes. Your sources list these as a key subcategory of crypto scams. How do those work again in the crypto space?
Well, they operate just like the traditional ones, using new investors' money to pay off earlier investors. This creates an illusion of high returns, making it look successful for a while.
But it's unsustainable.
Completely. It inevitably collapses, leaving the later investors holding worthless tokens or with nothing at all.
And the dreaded rug pulls fall into this category too, don't they? Where a project just vanishes overnight.
Absolutely. Rug pulls, sometimes called shill and rugs, are unfortunately very common. Developers create a new cryptocurrency, hype it up like crazy, get people to buy in.
And
Then they suddenly abandon the project and run off with the investor funds. This happens in a couple of ways. There's the hard rug, where they pull all the liquidity from the trading pool.
meaning you can't sell.
All right, impossible to sell. Value instantly drops to zero. Or there's the slow rug, which is sneakier. The team extracts value over time through different means, maybe selling off team tokens slowly without actually building anything promised. Then they just go quiet, and the token value slowly bleeds out.
And these are often amplified by paid promotions and influencers, right? It feels like we can't trust anything we see online anymore sometimes.
You're touching on a crucial point there. These scams are often boosted by paid press releases or articles, things that look like news but are actually ads, or influencer threads on social media, and even fake celebrity endorsements.
Like that Kim Kardashian thing.
Exactly. She was fined over $1 million for promoting a token without disclosing she was paid, $250,000 for it? That should be a massive red flag for everyone.
Definitely.
And beyond specific tokens, we also see broader business opportunity scams or charitable donation scams, fake ventures or fake charities asking for crypto donations.
So the key insight with all these too good to be true types.
They tap directly into that desire for financial gain, right? Which can make you ignore obvious red flags about unrealistic returns. Always assume that if someone is guaranteeing high returns, they're probably guaranteeing you a loss.
Sound advice. Okay, what's next?
All right, our third category is perhaps the most frightening for many. Direct wallet access and drainers. These are particularly scary because scammers directly target your wallet, often tricking you into granting malicious permissions.
This sounds like the digital equivalent of someone, reaching right into your pocket and taking everything.
It really is that direct, yeah. Wallet drainers are basically malicious code designed to take control of your wallet. Typically how it works is you connect your wallet to a fake site or maybe a dodgy app. You sign a prompt that pops up, maybe you don't read it too closely.
We've all done that.
We have. And unknowingly, you grant a smart contract permission to move all your assets out of your wallet.
All of them.
Yeah. And we've seen real-world examples that just hammer home the danger. An Ethereum core developer actually fell victim after installing a malicious browser extension. Even trusted sites like Cointelegraph, they were targeted by an exploit that put up a fake airdrop banner. CoinMarketCap had a malicious verify wallet pop up for a while.
So even reputable sites can be compromised temporarily. That's scary.
It is. And these attacks aren't just hitting smaller targets either. These are big, sophisticated operations.
Right, you mentioned big losses.
Yeah. In one headline case, a crypto whale lost approximately $32 million after signing a malicious transaction linked to something called Inferno Drainer, which is like an established scam as a service. And new kits like Vanilla Drainer, they're constantly emerging, already tied to millions in theft just recently. This is serious, organized crime.
So it's not always about actively clicking a bad link then. Sometimes I heard an unknown token just appears in your wallet, and that can be the trap.
Exactly right. That leads us to fake airdrops and unknown tokens in your wallet. Mystery tokens, maybe with names or descriptions containing URLs like claimheresomething.com or whatever, they just appear in your wallet.
Out of nowhere.
Out of nowhere. They're designed to lure you. You think, oh, free crypto, and you try to swap it or send it, or you follow that malicious link in the description.
And that's what triggers the drainer.
That can trigger the drainer, yes. Scammers, oftentimes, these are around big, legitimate airdrops to target eager airdrop hunters who might be less careful, just clicking claim everywhere.
Okay, this is critical. You mentioned hardware wallets like Ledger or Trezor. They don't fully protect you here.
That's a really important point. Hardware wallets are great for keeping your private keys secure offline, but they cannot fully protect you if you yourself sign a malicious approval or transaction.
Because you're still authorizing the action.
Exactly. Your keys remain safe on the device, but your tokens on the blockchain can still be moved if you've granted permission to a malicious contract. The key insight here is to assume every permission request is a potential threat, even from seemingly okay sources, and never interact with unknown tokens that just show up.
Okay, that's a big one. Don't touch mystery tokens. Got it. What's the last category?
Our final category is social engineering. This is where scammers use psychological manipulation, the human element, to bypass technical defenses.
This feels like the most personal type of attack, where they're not just exploiting code, but playing on our emotions and trust.
Precisely. It often starts with unsolicited outreach. Emails, text messages, maybe a DM on social media, a stranger offering free crypto, or asking you to test a new wallet, or maybe a supposed support representative offering help with a stuck withdrawal.
Right.
The Federal Trade Commission, the FTC, repeatedly warns that unsolicited crypto messages are almost always scams. Just assume they are.
And AI is making this worse now.
Oh yeah, AI is supercharging this.
Yeah.
During that SpaceX Starship launch back in June 2024, researchers counted over 35 fake Elon Musk live streams.
35?
Yeah, peddling the classic, send one Bitcoin, get two back bait, complete with pinned wallet addresses and QR codes, looking very convincing with deep-faked video.
That's wild. They're literally deep-faking celebrities to scam people live.
Yes, and it's not just live streams. AI-generated YouTube videos have pushed trading bot scripts that were actually malicious contracts, stealing over $1 million before they were taken down.
Unbelievable.
And criminals also pose as exchange employees. They call you or email you, trying to get you to verify your account or move funds for safety. Just this summer, there was a fake Coinbase support call center that tricked users into creating wallets with compromised seed phrases. They siphoned over $4 million.
Oh my.
Including $240,000 from an elderly victim. Is heartbreaking. And then, of course, there are romance scams, sometimes called pig butchering scams.
Right, where they build a relationship first.
Exactly. They build emotional connections over weeks or months, then trick the victim into sending cryptocurrency. The painful insight here is that your trust, your helpfulness, maybe your desire for connection, it can all be weaponized against you.
Wow. That's a comprehensive and frankly a bit unsettling overview of the landscape. So what does this all mean for someone trying to navigate this space? What are the key strategies, the essential tools we need to employ to stay safe?
Yeah, it's a lot to take in. But this raises the crucial question. How do we empower you, the listener, to protect yourself? The good news is many protective measures are pretty straightforward and really effective. They just require discipline and a healthy dose of skepticism.
Okay, let's hear them.
First and foremost, do your own research, DYOR. You simply must thoroughly research any cryptocurrency project, exchange, or investment opportunity before putting any money in.
What does that mean practically?
It means looking at white papers, checking out the team backgrounds, looking for audit reports from reputable security firms. Be extremely wary of projects where there's scarce, hard information, projects that rely only on hype or aggressive marketing buzz.
So don't just follow the crowd or the loudest voice on Twitter. Dig into the fundamentals.
Exactly. And building on that, number 2, verify everything meticulously. Always use official sources, the project's official X account, their official website, official documentation to get things like contract addresses.
Don't just copy it from some random chat.
Please don't. And then cross-confirm that address across multiple official platforms if you can. Critically, always paste the address, not the token name, into a DEX like Uniswap. Names can be faked easily, addresses less so.
Good tip.
Double-check URLs and social media handles for even the slightest differences. Bookmark official sites to avoid typos. Be absolutely ruthless about links. If you didn't actively seek it out from a trusted source, just avoid clicking it. And, check the background and reputation of any person or company offering you crypto investments.
Makes sense. Verify, verify, verify. What's next?
Third, guard your wallet and private information. This is non-negotiable. Never, ever, ever share your seed phrase, your private keys, or detailed wallet information with anyone, not even someone claiming to be support.
Never, ever. Got it.
Keep your main stash, your significant funds, in cold storage hardware wallets offline. Think of it as your digital safe deposit box. And for interacting with new stuff, new decentralized apps, mints, airdrop claims, use burner wallets.
Burner wallets.
Yeah, wallets with just minimal funds in them. Enough to do the transaction, but not your life savings.
That's smart. So if that burner wallet gets compromised somehow, it's not catastrophic. It limits the blast radius.
Precisely. And here's a crucial detail many people overlook. Just disconnecting your wallet from a site does
Artlist.io.
not revoke approvals or permissions you've granted previously.
Oh, really?
Yeah, those permissions persist on the blockchain itself. You need to proactively use tools, things like revoke.cash, or features built into newer wallets like Rabby to inspect and actually remove old, potentially malicious approvals you've given
Music
out.
Okay, so that's an
licensing
active step you need
reimagined.
to take.
Yes. Think of the small gas fee for revoking as cheap insurance. And finally, underguarding your wallet. If unknown tokens appear, just ignore them. Do not touch them, don't swap them, don't unlock them for trading, don't send them anywhere. If a token's name or description has a URL in it, it's 100% a scam. Just adjust your wallet settings to hide them so you don't even see them.
Hide the junk. Okay. Number 4.
Fourth, cultivate healthy skepticism.
Artlist.io.
This is perhaps your most powerful defense overall. If an investment promises guaranteed returns or ridiculously high returns,
It's a scam.
it's almost certainly a scam. Treat glowing write-ups and viral social media threads as marketing until proven otherwise. Look for explicit disclosures like sponsored
Music
or
licensing
hashtag. If the language
reimagined.
sounds like pure sales copy but isn't labeled, assume it's a paid promotion.
And what about those celebrity endorsements we talked about?
If a token is being shilled by any celebrity, avoid it like the plague, seriously. They are almost always paid promoters, not financial advisors giving you sound advice.
Right.
Also, resist urgency. Scammers thrive on creating that sense of FOMO, making you rush so you don't think critically. Remember, legitimate opportunities will still be there after you've taken the time to verify things
Artlist.io.
properly.
Don't let them rush you.
Exactly. And do not reply to cold outreach, unsolicited DMs, emails, texts from unfamiliar contacts. Legitimate projects, exchanges, wallets, they just don't DM you first to give you free money or tell you there's an error you need to fix immediately by clicking a link.
Good rule of thumb.
And be extremely
Music
cautious with live
licensing
streams,
reimagined.
especially those promising something that sounds way too good to be true and constantly pushing you to click links or scan QR codes.
Okay, skepticism is key. Is there a 5th point?
Yes, finally, number 5. Utilize tools. There are tools out there that can help. Employ reputable scam detection tools and browser extensions designed for crypto safety. Even charting sites like DexScreener often run basic automated checks on contracts and can flag suspicious settings, giving you at least an early warning sign.
Okay, so leverage the tech that's out there to help protect yourself.
Exactly. Use everything at your disposal.
This deep dive has definitely shown us that the digital
Artlist.io.
frontier, well, it's a place of incredible innovation, but also one where vigilance is probably your most valuable asset. What's fascinating and a bit scary is how the lines between legitimate opportunity and really sophisticated deception are constantly blurring. It requires constant adaptation from us as users, doesn't it?
Music
Indeed, it really
licensing
does.
reimagined.
Knowledge is your shield, like we said, but continuous learning and adapting your defenses, that's crucial. In a market that can get incredibly loud and chaotic, you just have to double down on your vigilance, keep that skepticism level high, and proactively protect your stack. Don't be passive about it.
So what does this all mean for you listening out there? In a world where digital assets can vanish with literally a single wrong click, perhaps the greatest defense isn't just about what you know, but how fiercely you guard that skepticism.
Artlist.io.
Stay informed, stay critical, and most importantly, stay safe out there.
Music licensing reimagined.